Hello, hi guys. Alright, thank you once again for coming back watching this video. How are you guys been doing? Alright, I hope you had a great week previously after watching the previous video, and thank you once again for coming back to continue your investing learning journey and continue to watch this video for this week. Alright, so without further ado, let's dive right in. Alright, so just a quick shout out. Alright, so if you're brand new to this channel and you like what we do on video and sharing how to actually learn about investing, alright, okay, please subscribe to the channel by clicking on the subscribe button on the YouTube page. Remember to click on the bell button so that you will be notified, okay, on our next up and coming video every time when we upload on this channel. Alright, so if this is the first time you're watching this video, please pause this video at this moment to read on the disclaimer. Basically what it means is that whatever we share on this video is just purely for educational purposes. There's no buy or selling recommendation. If you do decide to take any action based on any of the articles that we mentioned, please do your own due diligence before you actually invest into it. Alright, okay, so if you have been reading or watching the videos previously, I have actually shared with you about how to actually do investing, what are some of the basic skill set you can actually adopt easily to find good company to invest, right? What are some of the techniques you can use, right? But if you are a brand new investor up to this point, I'm very sure this is one of the questions probably will pop up in your head, right? And that is stock investing right for me, right? Because if you have been browsing on Facebook, okay, on the newspaper, on any social media, you will tell you, and you will definitely be bombarded with a lot of multiple ways that people actually trying to tell you how to actually grow their money, how to do investing, and how people actually make tons and tons of money through that avenue. Alright, okay, to be in all fairness, I would say every avenue actually makes money. The question is, do you know how to, and what's the advantage and disadvantage of each platform, and whether that it suit your investing style. Alright, so today I just want to quickly run through with you, okay, why some of the things about, right, stocks investing, and it's for you to judge to see whether do you think stock investing is right for you. Right, the key thing is, right, the first thing up is to understand, right, firstly, what can you invest in besides stock investing? In fact, what are all the things you can invest in? Alright, just quickly run through some of them with you. Definitely the most basic of all that we all know is to actually to save up some money, and the bank will usually pitch for something that is lower risk, that you actually can do a fixed deposit. Right, just put your money in the bank, just let it grow at some interest, a few couples of interest rate, and then you just voila, got some money out of the period of the year. Alright, but if not, you can actually do on bonds. Bonds are basically either like the government bonds or corporate bonds. What they do is they actually issue out this coupon, this bond itself, to actually borrow money from you, and they promise to actually pay you a certain interest. In this case, we actually call it a coupon over every year for a certain period of time. It's generally higher risk than saving plans, but it's still considered a low risk investment as compared to other form of investing. Alright, if you're not into such a low risk, you want something high risk, of course you can invest into businesses. Alright, you can be a startup, you run your own business, alright, or you invest with someone else, your friend startup, take a pool of a pocket of money, actually invest in their business. Or if you're on a higher level, you can actually be an angel investor to actually invest in new startup, or even buy out from other companies that actually be running very profitably. Right, that could be a way for you to grow your money. Right, if not, if you're not a person who's so into businesses, but you want to be part of such investment that you do with business growth, you want to be part of the business owner, for example, like Apple, Amazon, Facebook, right? You can actually go the other way around it, which is what we'll be sharing with you, buying stock and shares, right? So that is one of the way. Or the other way, if you like to do it but you don't have the time to manage it, or you don't have so much in-depth time to learn about the depth of stock investing and stuff, you can always invest into a mutual fund, or you can actually invest into an exchange traded fund. You actually have a portfolio of companies that is within this fund, and you just invest in that fund all along. Right? But if you don't like this kind of paper asset, of course, some people actually went into real estate. You like to buy physical assets. You like to buy homes in your country, in your city, or maybe globally around the world. Right? Otherwise, you can actually invest into REITs, okay, which is something similar to liquid assets, but instead of dealing with real estate as a physical property, physical asset, you invest in REITs, where these companies or these managers actually buy into assets and they manage them, and then they pay you a certain dividend every year for managing or earning money from the rental they collected from whichever property they own, right? That could be one of the way. Or you actually are totally have no interest about running physical assets, you're not so interested about stocks and share, you rather look at currency fluctuation, right? You can actually go into forex, right? Just to play with the different between different currencies, like the pound, like the US dollar, like the Aussie dollar, like the Euro dollar, etc. Right? Okay, if not, some people actually like to play into commodities. You like to play into the buying and selling and the volume or the price of, let's say, the coffee bean, the soya bean, the rice, the sugar, things like that. All these are commodities. Okay, if not, some of you probably have more exotic way of actually investing. For example, you like to actually buy and sell cars, you like to do it on painting, watches, red wines, etc. Some people actually like to do that, right? If not, you can go for something that is more in nowadays, which is cryptocurrency. The most famous is Bitcoin. All right, so that could be all. So at the end of the day, you have a lot of different asset class you can invest in. The question to ask yourself is, what kind of asset class actually suits you? Alright, so there are a few key factors you need to consider for yourself to understand whether that asset class actually meets your investing style, your investing needs to achieve your investment goal. Right? So the first thing you need to find out, what is your desired goals that you want to achieve. Right? For example, in the long run, in the next 30 years, I want to have able to actually accumulate $1 million from what I'm having now. Right? And you just want to hold your simple standard 9 to 5 job. Let me ask you, will you be able to achieve $1 million in 30 years if you just going to put whatever saving you have from a job into a saving instrument and park the money into a bank to buy a fixed deposit? Will you able to do it? Pretty unlikely, because the interest rate is too low. You might want to look at other options. Maybe you want to invest into real estate. Maybe you want to invest in stock and share. Right? Maybe you want to play with forex if you have the time. So on and so forth. So you need to see whether your goals can be achieved using the asset class to help you to achieve your goal. Right, the next thing is, which is actually quickly links to your potential return. By investing in the asset class, what kind of return can you have? So using the same example, let's say you want to actually have $1 million when you retire in 30 years time. Do you think you can achieve it if the potential return of a saving plan or fixed deposit is going to give you 1, 2, or maybe 3%? How long do you have to grow your money to reach $1 million? Right? But unlike if you know that, for example, let's say businesses or stocks and shares or even like real estate can give you a higher return, isn't it easier for you to take a shorter time potentially to reach your goals within the 30 years? Right? That could be one of them. You need to know. Right? The next thing you need to know, what's the potential risk? Right? It's easy to aim for the goals and want to achieve, but every investment, there's risk. That's the fact. That's a risk. So you have to understand what is the risk that you can accept. Alright, for example, if you do with stocks and share, you can limit your risk by only investing what you have. Right? You know that fixed deposit risks are generally lower because the bank will always want your money to protect you, or you can invest into bonds. You invest to corporate bonds, or you can invest to the safer one, which is government bonds. The government unlikely to collapse, except if you actually invest into very dubious countries, that you may or may not actually heard of, that kind of thing. But so generally are safer, so your risk is generally lower. You probably get lesser return, right? But if let's say you're going to invest into some other form of instrument, for example, you invest into Bitcoin, you invest into other form of cryptocurrency, the risk level is very high. Can you actually accept that kind of risk? If you can't, probably that is not a good investment, except you should consider. Alright? And at the end of the day, the risk actually depends on your personality. Alright? It's very easy for us to actually want to achieve 20, 30, 50% in return. Alright? And it's very easily to say that, no, it's okay, this is the pool of money I have set aside, it's only a small 10,000, 20,000, it won't affect my job, I want to invest it, I hope that it can grow to $1 million in 30 years time, right? But you pick an instrument when the risk level is so high that your personality can't match, but just by a simple fluctuation, a general fluctuation, let's say the asset class you are investing easily fluctuate between a plus minus 50% to a 50% gain. If let's say when you entered a position and that asset class just happened to go on a short bear correction and it just dropped 20%. Can you take it? Right, some of us we can't. So if you can't, that is probably a show that your personality may not, your risk tolerance and your personality may not be able to actually accept this form of asset class instrument. Right, you might want to actually look at something else or look at ways to actually minimize your risk level so that you are feeling comfortable. Right, so it all boils down to your personality. What kind of investing tolerance level do you have? What makes you feel comfortable to take the amount of risk to continue investing? Right? Okay, of course, one of the things you do take note is, do you have the knowledge and skill set and proficiency? Right? Never invest in something that you do not know. Okay, it's okay if you do not know now. Okay, learn it. Once you get the knowledge, test it out, invest bit by bit. As you go along the way, as your knowledge and skill proficiency increase, you can start investing a lot more into the asset class, right? So you need to take time. So, but it's always a skill, knowledge and skill set that you can actually learn and adopt about it. Okay. Last but not least is of course the work and involvement that may require you in that investment itself. For example, if you are work on 9 to 5, you are a person who actually want to have high return, you have high risk tolerance, and you want to actually invest into, let's say, businesses, right? Do you know how much work it is involved to actually run a brand new startup by yourself? You need a lot of time, you need a lot of testing, there's a lot of discouragement, you need to find a lot of sales, you need to talk to a lot of people. The work involved is so huge. As compared that if you have the same amount of money, you actually just, let's say you buy into stock and share, you probably just have to actually look at companies, read up their annual report, do a bit of research on what they do, how they make money, what are their competitors, what are their modes, and things so on and so forth. So you need to understand what are the involvement that needed from that kind of instrument, and that kind of asset class that requires you to actually invest in, and do you have the time and resources to actually get involved in the kind of investment. If you do not have the time, please do not invest in and chase because the premium or because the returns is so high that you hope to have it as well. Right? So don't go for that. So just run through this list, understand what are the key factors that are important to you and how you can actually strike a balance so that you can invest safely with a good return and you're comfortable in something that within your management, okay, you can control, right? So just to quickly share with you some of the reasons why actually people invest in stocks, right? Firstly, it's a lower capital as compared to businesses and real estate. I'm not saying all businesses require high capital, but there are many businesses actually require high capital. Likewise for real estate, if you are living in the country with real estate at a low price, you are great, you probably have a lot more opportunities. But if you are living in expensive cities, for example, New York, Hong Kong, Singapore, when the real estate is sky high, right, sometimes it's very hard for you to actually start investing in real estate. You need to find a lot more creative way to actually source for it. Of course, definitely you can do that, but in general, the traditional way of doing it is a bit harder as compared to actually invest in stocks itself, where you actually require lower capital and you can manage it by yourself, right? And the next thing, why stock and share, is because there's highly liquidity. Alright, for example, a business, if you do it well, but let's say today or tomorrow you need the money, you can't sell it immediately because you may not be able to find a buyer who buy your business immediately. Even you may do so, you need time for transaction. Right. Likewise for real estate, you have this property appreciated, you need the money today or tomorrow, you find a buyer immediately, buy tonight, but the transaction of the legal side will actually process the buying and selling of the property to free up the cash to you. You will still take months. Right. So it's not as liquid as compared to stocks and share. As long as it is a trading day, you can actually sell off your stocks and shares immediately and the money will be cashed into your account. Probably take another day for you to cash out from your current account or your trading account, but it's a lot more liquid, right? And when it comes to stocks and shares, it's a lot more wide choices. Okay, for example, let's say you are looking at bonds, if you're looking at forex, there's only that numbers of currency you can trade. But if you're looking at stocks and shares, in US itself, we have more than 7,000 stocks you can actually invest in, right? Just in US alone. Imagine you added in China stocks, like your country stocks, Hong Kong stocks, many more country stocks, right? Basically, you have over 10 over thousands of stocks to choose from, right? You have a wider range you actually can invest in. And the next thing, actually it depends how you look at your strategy. Some people actually look for capital gain, some people look for cash flow. Like stocks and shares, you actually can invest into companies that actually pay out dividends to give you cash flow. Right, that is one of the way. If not, actually buying a company and push it to grow. Right, that is usually the two main reasons why actually people invest into stocks and share. Right, last but not least, it also depends on your lifestyle. Right, because for stocks and share, if you only invest in a particular country or sector, for example, if let's say you only invest in the US stocks, right, you only will start investing and trading and look at stocks when the market is open. Probably you'll do some homework before the market open. That is ideally a good habit you should do, but usually it takes a specific amount of time. When the market is open, you probably will be involved in it. Alright, if let's say you are more active stock trader, you'll be actively involved during the opening till the ending of the stock investing itself. Right, if not, if you're a long-term investor, probably you just take the first couple of hours to actually get your position in and out, and then let it rest for the day. But the most crucial thing is once the stock market is closed, pretty much nothing you can do. Alright, and then that will actually match your lifestyle, because if let's say you're a family-oriented person, you like to actually spend time with your kids, your wife, your spouse, right, over the weekend, stocks and shares probably will be good for you, because when the market is closed on the weekend, you are not affected at all. Alright, so that could be something that you want to consider, and that is one of the reasons why some people actually go into stock and share. For example, if let's say you go into businesses, they do a startup, they will be tied up because they have to be involved in the business, especially if you run an F&B, right? Or some of you actually invest in stocks, invest in real estate, right? If you are a landlord, sometimes tenants give you problem, or some people actually want to have viewing, shifting, and things like that on the weekend. Your time might be taken up as well, right? So it really depends on what your lifestyle you have, whether does it fit into your personalities and your family lifestyle. Alright, so these are generally a few reasons why actually people invest into stocks and shares that you might want to actually consider as well. Alright, so a quick summary, alright, about why actually people invest in stocks and shares. Firstly, you need to understand there are actually a lot of different kind of asset class you can invest in. I just namely about 10 to 12 of them. There could be more, right? Obviously, there are more. It depends on how actually you look at any form of investing, right? But the key thing is to consider what are some of the key factors. I just namely put 6 of that. Alright, we usually name 6 of them. Just think about what are your goals, your potential gain, what are potential risks, what is your personality when it comes to managing risks, what are kind of knowledge and skill set you have, and what kind of involvement is needed to be investing in the asset class. Are you comfortable with it? Do you have time to do it? Alright, so these are the things that you consider. Of course, we just briefly share with you. Just look back, okay, on just a previous section about what are some of the reasons why other people actually invest in stock and share, to see that do you have some form of similarities that actually match your style. If it does, right, you can actually start investing a bit for a short period of time to test it out to see whether it really works for you. Alright, if it feels absolutely opposite of what you want, then stock investing definitely is not what you should get into. Alright, okay, so with that, I hope it helps you as a viewer to understand what's your investing style, to understand whether stocks and share is the right investing platform for you, right? So with that, I hope you found the right platform for you to invest and achieve your goals in the long run. Alright, thank you very much for watching. Alright, likewise, I wish you have a great week, and I will see you in the next training video. Alright, see ya.